What's going on? Hope everybody's doing well. It is November 12th, Wednesday, as we usually do this. 12:30, so we got about half an hour till market close. Just gonna go over the STAX flow. I don't believe there's any sort of major earnings to worry about today. No, we got Cisco after hours. I think that's the main one people probably care about. We got Disney tomorrow. Uh, Applied Materials after hours tomorrow. So now we'll take a quick peek over at those and see how they look. If you're here watching, go ahead, comment in the chat for me. Help me out. Let me know where you're coming from. If you're from STAX, ICC, if you're from TraderLink or any of the other Discords that we are also in, or if you're just here because of YouTube, I'd love to know how you guys found our live stream here today. Let's start off with today's flow. All right. As always, I like to go into our flow scanner, flip over to equals today, take a quick look over as to what's going on with the money. And we talked about this during our Discord live stream the last few days. We're seeing a very heavy flight to safety. So GLD gold, $171 million in calls to only 1.57 million in total puts. All right, so quite a big flight to safety. And if we do want to, we can always plug it in here, click on that, or if you even want to find the exact contract they're looking at. And we can see here they're aiming, actually there's quite a few that are actually fairly short term. They're expecting gold to shoot up past 390, maybe even hit 400 by the end of the year, or in this case GLD, so meaning gold will probably have a spot price over 4,000 by the end of the year, which I think is very possible. We do have quite a few factors in play that could definitely lead to that. One of them being the money printing that should probably start in December to bring up that price higher. Nvidia, SPY is just barely negative in terms of this. 14 million puts to 12 million calls. IWM, no calls at all, 17 million in puts. But I will point out, usually when you see SPY, QQQ, and IWM, and we are expecting a drop in the indices, you tend to see hundreds of millions of dollars of puts and very low single digits, or in this case it's just low double digits in terms of the millions of dollars of calls. So not exactly screaming that, hey, we're going to see a drop in the indices right away, but I do see that we have quite a bit of flight to safety. We'll also adjust this in a moment to see what the week looks like. Tesla, slightly bullish. EWZ, fairly even. Microsoft, fairly bullish. We'll take a look at that too. Microsoft had a very solid rally going in, the last few hours of today. Silver, more calls than puts. Google, interesting, 8 million puts to $730,000 of calls. ARKK, bullish. Amazon, more bullish than bearish. Netflix looking quite bullish here. Apple's fairly flat. Meta, basically even. UNH, United Healthcare, more calls than puts. And we got quite a few here. Palantir, Google, SMR, TSM, HYG, all looking bearish, but smaller numbers. Just, 1 to 2 million or so here. CoreWeave looking a little bit more bullish after it's dropped. JEF, $2 million in calls. So, as I get further down here, the numbers get smaller, so they're a little less to, consider. Nothing in particular, I would say, that really stands out to me here. One thing I do like to do here is if I want to see if something's really bullish, what's got more millions of dollars of calls to zero puts. So ARKK, Netflix looking pretty strong here too. So BE, Bloom Energy, this one's actually, we had a STAX AI print for Bloom Energy just last month or the month before, right? And that returned quite a bit. So let me see if I can find it in here. Just click on STAX AI, make it easy. Oh, actually, so back in July, this one ended up being like a 20-something Xer from this position. $32 here. If you look at BE for now, it's at 122. Even if you just bought that equity, it would have returned quite nicely. I will have the STAX AI backtesting up later today is my hope. I was going to record it and get it up for you guys. There's a lot of good information in there that I want to share about our numbers and about how STAX AI operates. But overall, I would say across almost 500 prints for STAX AI, we are seeing about a 300% average return across all of those. We did see a SLV, yes, very good. We saw SLV, silver came in today, and Amazon print came in today. They're aiming for 2026. They bought some time. I will point out silver tends to be kind of a slow mover, but when it does finally move, this can very quickly turn into a multiple X return in due time. So it's one of those things where you got to be patient. I get it. People that are unfamiliar with STAX AI, people that are newer traders, we always get these questions in the Discord. Are you still in? Is anything changed? Is there any sort of news? Why is it moving? Why is it not moving? Why did it go up? Why did it go down? We got a lot of questions about this kind of stuff. And I will say, if you're in a STAX AI position, you have to just make sure you're trusting what their analysis happens to be. I'll always give you what my thoughts are on it. You can always ask me, come join us in the live, come join us in the Discord. I'll give you my tips and tricks as to what I see when it comes down to the chart and the flow. But more often than not, over 50%, as 56% of STAX AI prints end up over 100% return. And I'll point out too, that number can continue to grow simply because a lot of times the most recent prints, the last month of prints that we've seen, generally tend to take a little bit of time for them to start moving up. On average, a STAX AI print takes about 90 days before it hits its high. And keep in mind, that's on average, so there's definitely ones that take well over 100 days. You just got to keep an eye onto the expiration date, how much time that they're buying. Back to the flow scanner though, if I look at just this week so far, we definitely see that flight to safety, gold, GLD. Nvidia's looking fairly bullish. It has, come back quite a little bit. After the drop that we saw when Michael Burry took out puts against Palantir and Nvidia, it's looking like he might be underwater at this point if he didn't already get out. But there is a theory that Palantir and Nvidia and a lot of these big AI tech names are basically overinflated at this point. So there is a little bit of worry in a lot of people's minds that we are in a bubble and that bubble is getting close to popping. But we're not here to necessarily time a black swan event or time that type of crash if there is one to come. Markets generally will have corrections over time. So again, those will present buying opportunities if they do present themselves. But as of right now, if you look for the medium to long term of any sort of stock market movement, it's generally going to go up. There are going to be periods of time where they do fluctuate a little bit more than you would like, but at the end of the day, as we continue to bring more money into our system, if we do start to print money starting next month, it's only going to inflate these asset prices. With that being said, this was my chart for SPY over the course of the last few days. My previous prediction played out almost to the T. I was off by like one resistance level. As of right now, we've peaked up over this 685 level I had drawn, and we've come back down to retest this original breakout. The question is, I would probably say this is more so where we're at. Do we come back down, break down below, or do we potentially have this situation where we retest it and go up higher? So, time will tell. There's, with the vote of the of Congress trying to figure out whether or not we're going to reopen fully or not. I do believe the vote. I haven't been updated on that just yet, but if we do fully reopen, there still will be another vote coming up and another potential shutdown in January, end of January. So it's not as if they've come to a full resolution. Oh, good. Thank you. I'm so used to Discord sharing now that sometimes I forget to switch over. Thank you for that. Yeah, my chart right here, like I said, basically this was what I had drawn out yesterday. I would say if you just kind of shift it over a little bit, that's kind of where we're at. Do we come back down, retest, and come down lower to fill this previous gap? Or do we potentially just see us rocket off of where we're at and continue up higher? Okay, so SPY is kind of in this zone. We will see bears and bulls kind of fighting around, and I will say that the flow scanner as of right now for today, like I said, SPY does have a little bit more puts, but it's fairly even, I would say, 15 mil to 12 mil. On the other hand, though, WaveX does show that there is more bearishness in the markets right now. Okay, I know there was somebody that had a question yesterday in our Discord. And basically, you have to understand, WaveX will give you a hint as to what sentiment is saying. Price does not always have to go in that direction, okay? We've seen times where we see more puts than calls, and price continues to go up. We've seen times where there's more calls than puts, and price goes down, all right? It is never going to be 100% guaranteed that just because of what you see on this chart, that price does that. But what you have to understand about options, and you have to also understand about short-term trades as well, is that they do put pressure on the options maker to hedge their portfolio in one direction or the other. All right. So another thing you can do in here is you can also check what just the 0 days to expiration trades are doing. And in this situation, yeah, it's definitely a little bit more bearish at this point. So these trades that are expiring later today could very much mean that near the end of the day, we could see the option maker start to unravel a bit of it, start to sell off because there's so many more puts. But again, it's not a guarantee. If there were a guarantee and a secret, crystal ball as to what's about to happen, everybody would be flocking to it. All right. So flow scanner, great way to, and WaveX, great way for us to get an idea of the sentiment of the markets, where the money is flowing. I generally say when we see something like this, it would probably give the probability of like a 70 to 30%, 70% chance that we will see the markets drop a little bit, 30% chance that it won't. Okay, I wish it was 100%. If it were, I'd be telling you guys all to go all in on a position, but that's not the case here. Let's go ahead and check out Cisco, which reports after hours today. We do see more calls than puts. WaveX is also looking more bullish than bearish. It is one of those, like we've said, kind of a boring company in a way. But Cisco Systems here moving up for today, well, right before earnings. Yes, my bad. I keep on forgetting to switch that over. All right, I got to be more diligent with that. SPY, like I was saying, SPY, we saw a lot of puts up here versus our calls, which basically means that there is more bearish sentiment right now. And you can also go in here and check out the 0 days to expiration. Still very similar. Okay. So as a result, as you see here, understand that this does mean there's more bearish of a sentiment. Yeah, you're totally right. I've been doing this on our live streams on Discord, where I can just click to a different screen, and that definitely makes it easier. But on my OBS system on my computer for these live streams for YouTube, I do have to switch around myself. What was it? I said looking over at the flow overall. SPY here is fair. Oh, this was the week. If I look at just today, it's fairly even at this point. So yeah, 15 mil to 12 mil. All right, let's switch to the charts. Let me do that real quick before I get in trouble again. I was talking about Cisco. So Cisco saw a bit more of bullishness right now. No, thank you for letting me know. It's one of those things where, you know, sometimes I get a little bit ahead of myself and I forget to switch things over. Cisco, do we see Cisco come back and reach its previous all-time highs? That's kind of a good question, right? We are in this broadening type of expansion of this channel. So it's possible that we could come up and retest that. Couple of headwinds though. We are seeing a little bit more of fear in terms of this AI trade. There's a lot of talk right now about how some of these bigger companies are using these special purpose vehicles to hide their losses from this AI trade. So basically, you have to understand AI, while it's great for the future, while it has a lot of potential for the future, there are quite a few things with it that are not fully set up at this point. Two main things. Number one, not enough data centers have been built for them to be maximizing their potential. Number two, not enough energy is produced for these data centers to run efficiently and for us to maximize the capabilities of all of these, AI and what they can do. So, as a result, there's a lot of money that is being promised to be spent on these things. And such as we've talked about, there's this giant circle of all the big tech companies that are passing money back and forth to each other. And, you know, it's circular financing, which technically is not, it's not bringing any real value to anybody at this point. You know, Nvidia's promising billions of dollars of chips to other companies, and other companies are promising billions of dollars of purchasing and you know, other services and creating data centers, blah blah blah. It's not necessarily going to, you know, it's boosted their bottom line and it's made it look really good. That's why you see valuations of these companies, you know, sky high at this point. But it's not necessarily going to there's a lot of cracks in the system, because at the end of the day, it's not as if any real value has been created. All right. One of the things to be concerned with is the fact that Microsoft, in their balance sheet, hidden away in special purpose vehicles, they have kind of hidden the fact that they lost about $30 billion supporting OpenAI and being a part owner of OpenAI in that sense in their investment. So the question here is, you know, how many of these other companies are doing that as well? Meta also has situations where there are parts of this investment that is not necessarily being shown as the bottom line. And the question is, how much money is going to be drained into these things? How much money are they going to put into these investments? And at what point are they actually going to be profitable? The big concern as well with OpenAI, which right now is still a private company, but OpenAI has about a revenue of about 13 or 14 billion dollars per year, and they've already made spend commitments of about 1.4 trillion dollars. So the 1.4 trillion, I want you to keep in mind, is a commitment for the next 5 years. But if you do kind of go through and say, all right, a rough estimate, average out 5 years, that's a little under $300 billion that they should be spending over the course of each year for the next 5 years. They make $14 billion, which is just a drop in that bucket. Where are they going to get all the rest of this money from? Now, it's not to say it can't happen. It's just to say that, you know, they have a very big uphill battle to fight up if this is really the path that they're going and this is what they're aiming to do. So, very interesting to see. We'll see how it plays out. All we can do right now is we can check the markets, see where the money's flowing, and make predictions as to where we think things, where we can make our money from. All right. At the end of the day, you and I are not going to influence whether or not that bubble pops or not. Okay. So the best thing we can do is educate ourselves and try to do our best to find ways to protect our portfolio and potentially make some money from the situation. All right. Cisco, if we're able to break up above this last point right here, we got what? 76 and then possibly back to those all-time highs. It's looking strong going into today. And I will say the PE ratio for this, 27.61, is a fairly low PE ratio compared to a lot of other names. All right. So Cisco, I feel that expectations are decently high, but if anything, this could be the kind of name that does end up, um, you know, blowing those expectations out of the water. Overall, with Cisco here, we also see, right, selling of some puts. It's mostly bullish when it comes down to what's come in over the course of the last, if I just filter for what's being bought here, it's a bullish trade right now. All right. We go down to wave X, like I said as well, more bullish than bearish. Some of you guys will ask me, okay, well, what should I get into? Well, let's look at what the short-term one, this one, $74 or higher. $1.75 for Friday. That's a pretty interesting one. You also have the $80 strike for January. So if you want a little bit more time, that one's not too bad. Only thing here is they had, $64,000, $77,000. While that is quite a bit of money to you and I, it's a somebody's full salary for a year. On the big picture, this isn't necessarily anything huge. This one's interesting though. So came in yesterday, aiming for above 74. They're already made some money off of this one. But I would just say that the expected move for this, at least for this week, right after earnings, probably isn't going to be too huge. We've noticed a lot recently how a lot of these earnings calls and earnings reports kind of chop up both sides. It's going to move price to the top, move price to the bottom, and then open up near where they closed at. Take out both calls and puts, and then probably the week after you start to see a bigger move come. So I would just be careful about that one. But if you do want to play your Cisco situation, I would gravitate more toward these. If you want a cheaper one, this 83-cent one for December, $80 calls. Otherwise, January, $80 calls. This is the big gamble here. 74, it's very close. If it does open up higher, your break-even point's at about 75. So, but this only gives you, 2 days for that to play off. Right. Quick question. How many do you have vids on how to use flow scanner, use the buy selection, sell selection on it? Okay, so flow scanner overall, is it not letting me click it? There we go. I leave it on the buy and the premium. This just lets me know what they're getting into. You obviously can filter for the sells to see, what they've sold out of, etc. But that gives you less, when they sell positions, they could be getting out of it. They could be using it as some sort of hedge. They could be selling covered calls, puts as well. So the buys and the premium, that's what's important to me because we see where the money actually is flowing. All right. And it just, I would use more so say that the flow scanner is a great way for you to go through and start to filter out what you want to actually look at. So for me, I like to look at, okay, well, they're getting into a lot of gold. Nvidia seems to be fairly popular. It gives you an idea of where the liquidity probably is going to be, where you can at least have a trade that is populated and have multiple people and lots, thousands of contracts to potentially trade against. Having a small spread on that bid and ask also definitely helps, and so that's where this kind of helps out. Another thing that I also like to do is if I do notice, okay, so for example, there's no puts right here for MRK and CTRA. Pull up their charts, take a quick look as to see, is there anything that they might see? Is it about to break out? Is it a trade that is poised for the upside? And then you can also always use this and get into the flow to see, okay, well, look, they have some very unusual situations here where they're aiming for April, where they're aiming for, in this case, a 10% move to the upside, $6 million spent right here, and then use that to help determine whether or not you want to get into that type of a trade. How much do I pay attention to frequency? Frequency is always good to see. You can also use this and filter, okay, so they're getting into a lot of these Nvidia contracts, right? And you can see as well, you can filter for the exact contract too, and use that to see, okay, well, here, they're actually buying a lot of these puts, right? They're selling a lot of these puts. So what that's doing too as well, selling the puts creates kind of a floor for it. So they don't really see Nvidia coming down below 185 right now. Okay. And using frequency, you can just use that to gauge, okay, well, that's going to be a popular trade, and that popular trade is very likely going to have solid liquidity to consider. Obviously, if there's only a frequency of 1, it's, you know, it's only one person happens to know it. That could be good and bad, I will point out. Maybe it's just an insider that happens to know something. So that's where you want to know, okay, well, how much money are they really willing to spend on that situation? Right? RSP, XYZ here. Netflix, that's a good one right here. Netflix, I feel that that's interesting to see. $6.1 million being spent. No puts being taken out. And you can see just today, they bought, right, came in at the same time, same number of contracts here. So, all right, well, they bought next year's, they sold this week's, made it a little bit cheaper of a trade for them, but still $6 million spent on this. They're expecting this to the upside of this situation, you know, just barely. You know, they're basically in the money on this one, right? They're at the money at this point. Yeah, 1.16. It's at 1.15. So, you know, ultimately what this just means to me is they're cautiously bullish on this position. You know, they sold some of the calls to very likely make some money on, let's see, they sold, 1.26, they sold above that. So for this to go down, for this, that's an interesting trade, to be honest, because that one doesn't, you know, usually if you see buying of those calls and then selling, oh no, right, they're right, selling these calls above, they don't expect it to go above 1.26 by the end of next week. That makes sense. We are getting to close. We're just gonna watch Cisco at the end of close. Drop your tickers that you want me to look at real quick. I'll pull them up. B was a STAX AI print that came in on the 20th of October. As you can see, they are up at this point, 33, almost $34 where they got in. It's trading at 37, so that position's probably already up. WaveX can give us a short-term expectation. It is still looking fairly bullish on that overall, so we could B should, I believe it's Barrick Mining Corporation. Oh man, let me show you here. It's moving. It's moving. I had this drawn out. I thought it was looking like a bull flag. It's popped up the last few days. It could definitely run away from here. So B's just, it's a good strong move today because it broke up above this previous resistance. So now my expectation for this, maybe we see a retest before we go higher. Worst case scenario, we come back down, fill this gap on the lower end. But with today's move like this, this one's fairly unlikely. I will say that. This one's much more unlikely to come all the way back down. Looking like it's ready to run away. PE ratio at a 17. Like I said, you see all that money flowing into gold, GLD right now. This is just another play upon that because the gold miners, while they are a little bit behind the price of gold, they ultimately will eventually move alongside with it because, again, their profits are going to come and be directly pegged to that. So if gold continues to go up, yeah, we're definitely going to start to see these gold miners begin to make more money and their profit margins starting to expand. BBAI. Slightly, oh, actually that's a decent amount of money going into it. BBAI looks like it's probably set up to go up higher, or at least in the short term right now. They did have an earnings report which did push them up higher. They could be set up to go back up. So they are in this giant wedge, right, from all the way back over here. Okay, from the previous high till here, it's consolidating. It's getting into a tighter range. This is when you expect bigger moves to come. Volume has started to flow back in. So I mean, it's looking like a play to the upside. Question in this one would just be how much time do you need for this to move up? It's right, if you look at here, it's right around where that point of control where there's this orange line I have drawn basically says that that's where the most buyers and sellers happen to stand. So if we can get this above there, you know, BBAI very possibly could start to come up from here. Right, it's got to obviously break above. Break above that resistance. But flow's looking good for BBAI. Yeah, this definitely has room to run. Is one of the smaller AI names. The issue with this name has more so to do with the fact that they lost a lot of money over time. But it looks like their net margin. Yeah, they finally reported a positive EPS, which is great for them. Which definitely, like, I want you to the standard that I use to explain this is Palantir. So Palantir, as you guys all know, has made quite a run up to these upper bounds. But when we first saw Palantir show up in the markets, it was not making any money. Okay, these EPSs, a lot of these were, I mean, the company itself was losing money overall and was not actually positive. And so it came all the way back down. And it was once it started to show it could actually turn a profit was when we start to see it move up to these upper bounds. Okay. So their earnings over the course of the last few years, so right, 2020, they were net margin negative 100%, then negative 33%. In 22, it was negative 19%. In 2023, it started to have a positive net margin, and this year it's gone up. So ultimately, once a company starts to, you know, there's a lot of companies out there that are they're losing money overall, but people are putting money into it because there is an expectation that one day when they do become profitable and when they do become a part of the world infrastructure in the sense that they're needed. So for example, the data centers, the AI trade and all that, that's a part of this. The market starts to flood money into it because again, it's making money. It's a good company to own. But until that happens, um it's always this like speculation of what's about to happen. So Palantir started to have that, and once it started to show its profitability, that's when we started to see price run up. And of course, you can see with government backing and things like that, this has run up like crazy because you can imagine Palantir at one point was like under $5 for the stock. Okay, so BBAI here, while I will say doesn't necessarily have to do and run up as crazily as Palantir does, they still got to show that they're making money. If they really are starting to flip into profitability this quarter, right, their net margin's actually positive now, then what that basically means to me is that there will be investors that want a part of this, right? So if that is the case, yeah, we probably could see this come back up toward about $10 or so. Question is, how much time is it going to take? Is it going to chop around before that happens? Is it going to are we going to see big money continue to suppress the price down a little bit lower so that they can get it and snatch up as many shares as possible, and then we start to see a campaign to the upside? That's basically the question. How much time is it going to take before we start to see it move up higher? I've noticed in some of my positions, volume will drop even to zero, I think I've seen, but OI stays high, yet the contract price doesn't change. Can you explain why that might happen? So volume is just a calculation of how many of those contracts are being traded that day. Okay? And there's some days where people are not trading your contract. People are not trading that specific ticker. There's no people getting in, there's no people getting out. But that's not what's important. Volume does help when you have and you're trying to trade with people, to have lots of people trying to trade that specific contract because that narrows that bid ask spread. But OI, which is open interest, meaning those, just like you have that contract right now, you're counted alongside with that open interest, which means that if the OI stays constant, there are people still in that trade expecting or waiting for it to play out. And what we're looking for in a lot of our cases is, especially in something like STAX AI. Under STAX AI, you see the details in here. That detail is going to be counted alongside with volume. So for today, right? Today's the 12th of November. This one for silver, there were 12,000 contracts for silver that were bought. OI is at 18. So tomorrow, as long as they hold on to these contracts going into tomorrow, this 12,000 volume will be counted as OI. So if nobody else trades today, tomorrow OI for this specific contract should be at 12,018. And if volume stays at zero, volume stays at, next couple days, it's all zero, but OI stays at 12,000, that just means that they're still holding on. So OI being constant, especially if it's a large number, is usually a good thing for you. It basically means, you know what? They're still waiting for that trade to play out. They're still hanging out around in there. When you see that same volume, if all of a sudden I see 12,000 volume come in again, and then you can take a look at some of the charts where that volume comes in and it's, them getting out, right? The next day, that OI drops back down to 18 or maybe even back to 0, right? All those people got out. That's what you're looking for. So this is a hint into whether or not they're buying or selling, getting out of those positions. A lot of you guys wanted JD, right? JD, I will say JD's been kind of a disappointing trade overall. I have my theories that it will be suppressed for a little bit, and down the line, probably closer to January, we'll probably start to see this move a little bit more. There's been a lot of hype for it. I will say, like, if you look at what's being bought, there's a lot of people buying and getting into JD. But a lot of them are aiming for January. I will say a lot of those November ones are starting to get kind of burnt in this situation. And the flow scanner overall has tended to look like this, where either there's more puts in there or we end up seeing them both under 0, which in this case is kind of indeterminate for us. The chart, though, I will point out, has held up fairly strong in this little area. I have this yellow box right here. Okay. And if I were to show you that, that's basically, let me copy it over. That's basically just us chopping around in this range. So if I were to kind of redraw this so it looks a little bit more, I still think JD's heading up. But I think it could take till January or maybe even through the middle of next year. The main thing that's going to really boost this right now is, okay, number one, earnings. If it comes out Thursday, so tomorrow morning comes out great, we couldn't see this go up. But on the other hand, too, a big part of what moves Chinese companies, at least in more recent time, has to do with whether or not they decide to stimulate their economy. So imagine us with our money printer. At some points, they will announce that they're going to put a bunch of money into their economy. That's what happened here in September 2024, and then we also saw a little bit happen here in January as well. We saw these Chinese names just ridiculous rocket up to previous, support and resistance. And then as of now, it's kind of just chopped around since there. But JD still has that look of a Wyckoff accumulation pattern. There is definitely a risk that it could come back down toward like mid 20s, so 26 or so is kind of where this other line would be. But it seems as if right now we are chopping around a lot in here. Candles are fairly small. Movement is not that great. There is volume still coming in at this range. So what we're looking for here is what would be considered a last point of supply, where we see a large move. So this could have a large move up to about 36 or so, and then move up to the upper bound of this range, which would be in the 40s. Okay. Is it going to be earnings? It could be. Maybe tomorrow we see them report great numbers. This is a company that brings in billions and billions of dollars. So if they are able to report positive news in that, Another thing to consider is the fact that this company right now has an EPS, a PE ratio of 8.87, which is tiny. Okay, let's use Baba as an example. PE ratio at an 18, which is still kind of low. All right, Baidu, PE ratio at a 12. All right, now take a look over at Nvidia. Nvidia 54. Okay, Microsoft 36. So the fact that those big companies in China have such a low PE ratio generally means that it is quite a decent time for you to consider buying those positions. Okay, JD, this is extremely, extremely low. So I would not be surprised over time for us to see, either if, especially if their earnings tomorrow comes out really strong, price will start to move up. Okay, JD right now is an undervalued stock. I know because we got into it fairly early, expecting the move to come by now. A lot of those contracts have gotten burned. And the hard part, like I've said for you guys, a lot of times if you're trading options, being early is just the same as being wrong, because a lot of times your theta decay will tear you apart. Okay, but with the research, with the numbers behind this company, they are undervalued. The big question is just going to be, when is price going to go start to match what their real valuation happens to be. All right. I know there are a lot of people that were in this trade along with Ducky. Unfortunately, it has not played out exactly the way that we envisioned it. But ultimately, come back to me in 2026. I expect it to be up here in the $40 range. And that's also another thing to remind you guys about is, if your trade is starting to make your hands sweat, if your trade, you don't have your confidence behind what's going on. I mean, I get it. Some of you guys are going off of what we're saying. You guys are following other traders, following people in the Discord, following people on Twitter, things like that. But when those start to go against you, what was your plan to begin with? Right? You should have your own thesis. I mean, part of your thesis could be listening to what I have to say, asking me what I think about that position. But if your position is down 50, 60% on that, a lot of times what you're looking for is you're just looking for confirmation bias. Try to make your decisions on your trade before you even get into it. I'm going to risk this much money. If it loses this much percentage, I'm going to get myself out, or I'm going to average down. You have two choices, right? If it goes in my favor, what are the positions or what are the points in which I'm going to start to get myself out of that trade? Where am I going to take my profits? What would create greed? What will create fear? Consider that for yourself before you get into your trades. And especially as you trade more, you start to realize what you get yourself into, what you end up doing in a lot of situations. So for me, if I see that I got 100% on a trade, I'm taking at least my initial investment out of it. If I want to leave runners, I'm allowed to. But overall, I'm not going to let a 100% winner go red. That's unacceptable. Okay? If I have a thesis for the future, if I think it's going up higher, that's where I can let those runners go. I will point out too, though, STAX AI, in a sense, again, like I've said, 56% of STAX AI prints end up going over 100%. Over 39% of them go over 200%. So in some situations, you have to trust your analysis, trust your data, or at the end of the day, you have to set up these plans before you get into your trade. Once you're in your trade, your emotions start to take over. Greed and fear will play a factor in it. And again, a lot of that I will say just comes with your experience with it. Okay. SNDK, SanDisk. So what we started to see here was that memory. Man, SanDisk has gone nuts. It's gone parabolic at this point. This went from up 400 something percent. So one of the things that's going on is the fact that storage and memory has become essential to this AI trade. So we saw a lot of money flooding into SanDisk. We saw money running into Seagate Technology, Western Digital. A lot of these ran up because at the end of the day, they need a place to store. These are hard drives and memory for computers, and the AI trade definitely needs this. Okay, so I don't see full exhaustion just yet. I think we could still go a bit higher. The hope for this position is the fact that you hopefully got into this a while earlier, because this has just run up like crazy. So let's see what we have to say in terms of STAX. I don't see too much being traded on SanDisk. We have quite a few puts being sold, some puts being bought. These really very possibly could just be them hedging in the case that all of a sudden it does start to drop from where it's at. It's still looking fairly strong, fairly bullish from where we're standing. But again, today it's had a pretty strong move to the upside so far. So I'll keep that in mind. Yeah, SanDisk has been strong. Quick thing too, we can always jump in here. No insider trades, no politician trades, at least nothing lately. So sometimes you'll see insiders start to unload their position heavily. That's never a good sign. Open. Huh? Open went from $8.23 today up to $9.41. It's looking like it's coming back a little bit. My chart wasn't. It rejected, came down lower, but it's coming back. It's looking like it's starting to break out of this flag. So, I mean, if you're in this trade, it definitely has expectations to the upside. Let's see real quick. Hold on. Yeah, open. This flag moving up to the upside. So, I mean, break up above $7 or $9.71, and we might be retesting this high from here. So, I will say though, volume starting to come in. That's good. Increasing volume. So it's a strong move. I would just be careful with the trade because it's kind of fallen into a meme stock status with how much, it's just got that energy to it, which does mean that it could still squeeze up higher. They are set up for success in the long run, but price can kind of do some irrational things moving forward. But this is a strong look. 3 big candles to the upside, closing near the highs. I don't think this move is done just yet. Volume increasing. Let me make sure you see that. Volume increasing on it as well. What you want to see, or what you don't want to see, and a signal that the move is starting to be over, is we start to see a very low candle for volume down here, in the next couple candles. So maybe we push up to this upper bound over here, and all of a sudden we see volume drop off heavily. That's where you start to know that, hey, it's probably time to start getting out of this trade. But I would still keep an eye on STAX. It does look like it is still fairly strong right now. If you take a look at it, they are aiming for February. They're aiming for January. Even just the end of the week, they got some December contracts in here. So Yeah, expecting it to move to $10 and above. So I think we'll test out 10 pretty soon. All right, let's go back over to, let's just see how Cisco did. Cisco, yep, I said gonna go up and break up the upper bound. So it broke up above, went to this resistance, broke above it. It's using it as support. So next destination is going to be those all-time highs. But like I said, Cisco raising, outlook beating estimates. Like I said, it's a strong company. It's a boring company, but it's necessary. Right, telecommunications equipment. All right. Bring this. I hate seeing this. When you're bullish on a trade and all of a sudden you see just calls all sold off. Very bearish on the trade overall. Thing about Peloton's been kind of doing this for a while. I'll bring up my trades in a sec too. But Peloton, the first thing I will mention about Peloton is the fact that their stewardship, meaning the people that are running the ship, people are running the company. The dude, when prices were up and all the way up here, the CEO was selling off shares and doing a terrible job managing the company. If you take a look at this too, and this is the daily, like, you know, one of the things for my Investor Central Academy class that I ran with Chemo was I would have people go and look at old charts and see where you find this exact pattern. This is called the psychology of a market cycle. We have this euphoric rise to a top, and then, you know, basically this bubble pops and we come all the way back down, and we're basically in the depths of despair down here. And if you take a look as of right now, it's starting to gain a little bit of traction. Okay, so it had a little bit. This is where anger is and depression is. There is a possibility we could start to see Peloton start to rise a little bit. The trade behind Peloton has, the thesis here is the fact that they have a lot of infrastructure in place. You know, you've got all these bikes that people are using. You got some treadmills that they've sold. The name that they built for themselves is kind of one of the top ones when it comes down to the fitness industry, or at least it is a popular name. If anything, it's like the popular kid, but the popular kid has a lot of issues with its, you know, its bank account, its bankroll. There's been a lot of rumors here and there about whether or not this company could eventually get acquired by someone that would ultimately be able to flip it into something where they could use that infrastructure. Okay, so down the line, and we are starting to see a little bit of Peloton, you know, calls and more longer term plays coming into play for this. I would not be surprised to see this come back up toward about $10, maybe $15 in the next, you know, 1 to 2 years, maybe. There is a possibility. Now, it's not. I wouldn't say this is a very high conviction trade at this point. But if, you know, this company, I don't think will just disappear. I think down the line, maybe, you know, the idea at one point was that, you know, maybe Apple will find a way to acquire them and then use it and rebrand it as Apple Fitness in some way or shape or form, create some sort of community where people can compete on Peloton bikes, and have some, either a partnership or something else that makes it work. Okay, so we're, you know, right now there's actually a lot of names that, and the two that I would point out right now, two that we're in, Snapchat is in You know how I've just mentioned earlier about how we have this situation where Palantir was not exactly profitable, and it started to make its rise once it flipped the script and started to bring in good revenue. Well, Snapchat is kind of right along those lines right now. Snapchat is worth billions of dollars, brings in, okay, it's a $15 billion company, has and annually brings in revenue of $5 billion, but their net income is a negative 600, almost $700 million. They now have a partnership with Perplexity AI, where they're going to get paid for for their database in a sense, for their users to start using Perplexity. So they start to flip the script. Right before this last earnings, we noticed there's a giant candles or giant volume in terms of people buying up shares and big money accumulating these shares down at this $7 to $8 range. Their earnings also came out as a big surprise because they released basically what they were doing for the longest time, where they're allowing their users to store all their images and videos and everything, and Snapchat was footing the bill for all of that storage. They're basically paying Google for all that storage. Then they came out with this, Snapchat Plus subscription, where users would now have to pay if they want to store anything over, I think, 5 GB of images. And as a result, not only did they decrease the amount of money that they're spending for storage, they started to flip it around into a situation where they could bring in revenue as well. So that changed their bottom line. Perplexity paying them $400 million as well to integrate with their platform brought in more revenue as well. So they're starting to flip that script. They're right at that point where, kind of just like Palantir, they at the in the next 1 to 2 years, I could see Snapchat trading at 10, 13, and eventually probably $18 or so. Question, like I've always said, is when. Okay, it is very much looking like it's in this accumulation pattern, and if we can see this continued move to the upside, these impulse waves to the upside, we should be able to complete this pattern and potentially come back up toward these gaps that exist from before. Snapchat basically $1 billion, or a billion active monthly active users, MAUs. On the daily, they have, I think, 400 or 500 million people using their app on the daily. Okay, so it's situations like this, looking for undervalued companies that have a plan for their future, that you could make those multiple X returns on. I'm still in Snapchat for January and for June. I have a couple of contracts that will be expiring next week. As long as we hold up above 9, I'm probably going to get out of them pretty soon, roll them over to the other ones. Those ones were actually still down overall, but my June contracts are now, I think, up 50% or so. Lyft is another one that's very similar to this as well. I've had this chart for you guys. We got into this before earnings. Earnings were poor, but we still saw this moving up. We are now moving up into this gap, and as we move further into this gap, we can aim for this $30 price target for Lyft. But you can understand Snapchat is down in this area, starting to come back, maybe even this area. Lyft is now breaking up above that, moving into the higher ranges. So Lyft has been pretty strong these last few days, especially as we see the price starting to move in our favor for this. Lululemon. I had Lululemon chart, so basically this is called a distribution pattern. We had it charted out for the upper side of this. I've made money off of this drop already. Now the question here is, do we start to see accumulation down at this range? And it is starting to look like, it is getting bought up at these lower ranges. Let me do this real quick. So I know this big candle kind of messes this up. So I like to bring that candle off the screen. And you kind of look. So here, volume coming in, volume, you know, it's getting bought up. And volume, as we reach the lower ends of this, do we see volume decreasing? Do we see fewer people wanting to let go of their shares? So I think, yeah, Lululemon, very possibly we could start to see this move up. I had this charted out that we will create some sort of range over here. We'll create a range down here. And then, you know, give it 1 or 2, maybe 3 more earnings, and we could possibly see Lululemon start to move back up. Now, right now, think about it this way, too. When we're going through accumulation, the news is generally going to be pretty negative about the company. So Snapchat was, you know, people hate Snapchat right now because they, you know, think the CEO's not doing it right. They're spending too much money on their glasses and things like that. Lululemon right now, you're hearing a lot of stuff about how Costco's basically taking their lunch. Costco has duplicates that, you know, people would rather spend their money on. I will point out, though, I've more recently seen a lot more stuff like Alo and Vuori, which are other companies that are direct competitors to Lululemon. But I've always felt, and you guys can tell me if this is true, I've always felt that the people that are loyal to Lululemon kind of stick to it. Their quality overall tends to be a little bit better than a lot of other companies, and they, you know, they branded themselves as kind of the more upscale. Like, again, a pair of leggings are like $100 when you go to Lululemon, sometimes even more. So the more recent pops that we've seen, one of them was due to the fact that if you have the American Express card, I think you get like $75 per quarter to go spend at Lululemon, which is just, you know, them eventually getting more people, not only to represent their brand, but also to go visit their stores to eventually prop up that bottom line. So Lululemon's doing their best to try to, you know, hold themselves up. It's still right around what, $170 per share, and you can understand PE ratio. If Lululemon is here to stay, a PE ratio here at 11.66 is probably where you do want to be purchasing at. Okay, so keep that in mind. Yeah, look for these undervalued companies as much as you can. All right. I like to end off some of these, especially today. I'm going to end off this with a little discussion about STAX AI. I will record an individual video on this later. But I wanted to show this to you guys here about STAX AI. Let me answer this real quick. I have another question about WaveX and Flow Scanner. So, for example, looking at Meta, WaveX shows today 100 mil total traded, 7 mil calls, negative 70 million calls, and 29 million inputs. Yeah. Well, here's my analysis on Meta. Okay, first off, Meta's dropped pretty hard after its last earnings, basically because they missed their bottom line due to a one-time tax fee of, I think it was like $16 billion or something like that, where they had to pay the U.S. government. Right now it is okay. So this is showing that through today, which again, by the way, the yellow line is the price. We saw price come down toward this lower end, and puts were in favor. So people were buying puts. Calls were being sold off. Okay. Now, in terms of STAX here, STAX is showing that, okay, well, for today, there's a mix of stuff, but we do see quite a few calls. And if I filter for just the buys, they still are buying calls. Now, what does the context say? They're buying for December, a few for Friday. This one's for in the money, so that's a little less aggressive. Next week, end of this week, we got December, etc. Okay, so this big put, 1.8 mil for middle of next year, they're aiming for this to drop as much as to $530, so another 10-13% down. Okay, so to me, this is giving me mixed signals. So it's not a very clear direction just yet. All right. Then what you do is you pull up the chart and you see where your resistance levels are being put. Right. So I'll pull up my chart here. I originally thought Meta would make its bounce earlier, but it looks like it came down to the other area of resistance I've drawn. And this is where we're going to see the battle happen. All right. Very possible this is going to be where we see either redistribution or accumulation happen. So if Meta continues to report bad numbers and there's more hit pieces that come out against it, we could break down further. Okay. But as of right now, it's looking like we are seeing some volume coming in. We are starting to reject off of this area of support that I've drawn. So we might just see a bit of chop around in this range for a little bit before decisions are made, right? Overall Meta, I would be bullish on it on the long run, medium to long run, but there is a small possibility we could see this break down a little bit further and then come back up afterwards, right? That would just be a market cycle. Okay. Yeah, but people are buying Meta big money leaps and they are getting into it for the long run. Just because again, it is, it's got such a hold on social media at the end of the day. My original thought was we would see a bounce earlier, and obviously this one did not play out just yet. So this trade, I would say Meta, maybe, this could be a place where if you're getting shares, could probably grab some shares here if it does come down further, dollar cost average further down, and it will recover from in time from there. The thing right now that is against Meta has more to do with the fact that, like I said earlier, some of the AI trade names are finding ways to hide their losses with what we call special purpose vehicles. There are different ways of doing the accounting so that it doesn't reflect upon their direct balance sheet, but they are burning cash at the end of the day, and Meta's hiding billions of dollars that way alongside with Microsoft. Okay, so okay, difference between in totals of Flow Scanner and WaveX. All right, I want to make sure that you guys are clear about this. WaveX and STAX are getting data through the same provider or the same data source. But however, you have to understand that what's showing up on our options flow in here is actually filtered. We specifically go through, and there's going to be prints on here that you're not going to see because we've deemed them to be noise. Okay? So for example, they might buy heavy in the money calls, or they might be buying, maybe somebody bought $10,000 of calls or $10,000 worth of puts. STAX AI is not going to show that to you. We have our thresholds set up. We've got specific situations set up where we actually do not show those prints on here. Because I don't know if you guys are familiar. There are other data sources. There are other services out there that you can go purchase, similar to STAX, but they have no filter on it. The big one out there is Unusual Whales. You can definitely go use Unusual Whales, but you got to go through and set up your own filters for it. I believe Max did set up and showed you guys what Unusual Whales is like. They have a print coming in like 5 a second. So this, you'll never get a moment to really catch up on here. There's stuff coming in over and over and over. But it's also like, if you and I decide to go spend 15K on a position, we could show up on that. Okay? You're not going to show up on STAX unless you spend a certain dollar amount. In this situation, I believe our threshold right now is set for 50K or more. Because we don't believe that we need to... Do you and I need to see what, Mr. Smith next door is buying, and he just happens to be following Reddit, and he wants to put 10K in there as a gamble? Is that actual data that you and I need? No, right? It's noise. We want to know what the big money people that have connections, people that are willing to bet high dollar amounts on a position, we want to know what they're doing. So we filter a lot of that out. However, WaveX is taking the entire amount and it's aggregating it all for you. So this is everybody. Mr. Smith's $10,000 is going to be in on WaveX. okay? So that's why you'll often see, and we've had this question. So let's say, for example, Meta looks like there's a lot of green in here, right? There's a lot of green. Yeah, we got one big red print right here for puts, right? But the buys and the sells are calculated in here. And so, for example, overall, there's a lot more selling of calls happening, a lot more buys of puts happening for Meta when you consider the entire data, the entire ledger of when it comes down to the data flow. Does that make sense? So WaveX is everything. WaveX is all the buys and sells. STAX is what we deem is necessary for us to see. The important stuff will show up on here. We're not going to filter that out. But the little guys, the people that don't know what they're doing, we don't need to see what they're doing because, again, that's too much data to make decisions based off. Okay? So, hope that answered your question. And I will say that's also a big part as to why STAX AI has become so useful. Here, let me decrease my... Probably should have done it earlier, but might as well do it now. Okay. STAX AI. This is our baby. All right. This is... STAX will go through, filter out the most unusual situations, the most unusual high dollar amount positions that are being taken behind the scenes, and it will, give them to us usually around 20 to 30 prints in a month. Okay, there obviously are some months where it's lower, some months where it's higher, but I go through this on the monthly, and I go through and I backtest every single one of them. So I'll pull up every single one of these prints, double check to see what the highs were, if they've gone down, double check to see the spot price, meaning where did they get into Google, when did they buy these options at, but what was the price that Google was trading at, and then compare it to where it stands today. And in doing so, we've found a very interesting and very, I would say this is a ridiculous stat to consider. Over the course of 26 back-tested months, all right, 26 back-tested months, I will say technically it's 27 because I combined June and July in the very beginning, but there are only 3 prints there, so 26, 27. Out of all of these back tests, only 2 of the months that we've had did the average return not reach over 100%. Let me clarify that, okay? So every single month of STAX AI, if you held those positions to the highs, would have returned you over 100% every single month. Most months actually much more, so 400, 300. This one was 600, almost 700% return. Only 2 months has STAX AI not reached that 100% threshold. Okay. Overall, and I like to use this one down here, is that there is a 15% threshold, meaning that if a print does not return 15%, I count it as a miss. Of our nearly 500 prints, 425 of them have been wins, which is an 86% hit rate. All right. I mean, and there are NBA players that don't even shoot free throws this well. Okay, this is like the top percentile of it. Overall, it takes these prints about 90 days for them to hit their highs. So obviously there's higher, there's lower, but it's just to show you that big money likes to get themselves into positions which are very high percentage returns. On average, across our nearly 500 prints, the data's all there, we have about an average of 304% average returns. So basically, you can quadruple your account technically by following STAX blindly. But I will give you a couple of caveats, a couple of things to consider. Nobody's really necessarily timing the top, okay? So even if I told you, well, let's say you get about 50% of where this is going, you're still getting 1.5x your portfolio. Okay? And I will put together additional numbers for you guys very soon. One of the conditions I can do is, what if every miss that we had turns out to be a minus 100%, minus 99.99%. Okay. Um, you know, on average, our highs will still be around 2 to 300%. It's still a very high percentage hit rate. Now, a lot of people always ask me the question, I don't know how to use this. Eric, this is confusing. There's a lot of data here. I'm not sure what to do. Okay. Well, what it basically is it just opens our eyes as to what tickers we might want to focus upon. Okay. At the end of the day, STAX is going to do its best to sniff out what's happening behind the scenes, what people are saying behind closed doors. A lot of times, and the majority of these big movers and big winners tends to be correlated with something alongside of news. So what my theory with STAX AI is somebody behind closed doors finds out some sort of deal is about to happen, some sort of great earnings report or revenue is about to hit, and they go into the options market and they decide to go put $1 million or more on that position. STAX finds it so unusual because it is a very high risk position that not everybody is necessarily looking at and willing to put that type of money toward. And more often than not, right, 80 something percent, 86% of the time, we see that it plays out in their favor. All right. And there's some crazy situations too, and this is where I can show you. Over 50% of these plays end up hitting 100% or more. And as you can see, this is filtered for the highest possible returns that we've seen. Alibaba back in January, we saw this in 47 days, multiplied their amount by 34, basically 3,300% return. TSM, back when we first released TSM, one of our first STAX AI prints, ended up with a 29x return. Okay. VST, here I'll even make this bigger for you guys to see. VST, 27x. BE, this one was recent. I pointed this out in our stream earlier today, and it's about to expire next week, but they got in at a strike for a $40 strike. This is trading at 126 right now. On the highs earlier this month, this was a 27x return. Okay. Obviously, you'll have these names. You'll have some NVIDIAs in here. You'll have some, but like this one, Intel. In August, they got into Intel for a $25 strike, and it was only $108 per contract. Those are now trading at a high of 1,752 as of the end of last month, right before Halloween. Okay, so STAX gives you good possible trades to get into. An even crazier statistic to consider is the fact that a lot of these whales are not taking the most efficient and the most prime entry for these. A lot of these positions, especially the first month that you see them, end up going down. There's a drawdown of as much as we've seen, 50, 60, 70% before it ends up going into the green. Okay. The theory that we have is that they want to have plausible deniability that they didn't have insider information. They can argue that, hey, my position, my $2 million position was down 500K, 600K for a good 2 months before this moved. I had no information. I didn't know this was going to happen. Okay. So what that basically means to me, and my suggestion for you guys, is you don't have to jump into STAX AI prints right away. STAX AI prints should put that ticker onto your watch list. Then try to find a good entry point for yourself and allow yourself to use STAX and other information to give yourself a prime entry. For example, the one that I have for us right now is the fact that Snapchat and Lyft, which both are doing great right now, were STAX AI prints that came in, and we waited just a little bit to get into those, and that's where we see at this point about 50-60% return on them. I do expect them to go up further, especially because, for example, this lift print has up until March of next year, so we can be a little bit more patient with it. And what I would generally suggest is, at the very least, once you hit 100% return on it, take half of your position off, let the rest of it run if you want, if you do expect to see it go up further. But as always, use your TA, use your technical analysis, use what STAX is saying. Sometimes you can filter into the news and see what they have to say and allow that to help you make a more educated position. Okay. And I get it. There are some people that like to say that the stock market is gambling and the stock market is a casino. And while there are some valid truths to that, if you have no idea what you're doing, a lot of these investments they're basically educated positioning for where your money goes. All right. So if you're able to, emphasize, what my emphasis here is that STAX lays a very solid foundation for you to consider. And if you can learn how to maximize the use of these prints, the use of this information, I find it very hard to see somebody using STAX AI that would end up, having large drawdowns at the end of the day. The data's all here. If you guys are interested in having a conversation about this data, or you would love to find a way to backtest it yourself and things like that, by all means, you guys can always email me. Go to eric@investorcentralclub.com, or you can email our entire team, help@investorcentralclub.com, and and we can always discuss it from there. Okay. How do you know if they will ever come back? AMSC, down a lot right now. So the unfortunate part about that is we don't know. Our data does say and does show that there is a possibility. Let's see, AMSC. My question for that one has more to do with, number one, do you still see the open interest on that position? If the open interest is still there, there's a chance they're still in it, and they might have additional information coming in. Number two, did they, if not, if the open interest is gone, see if they might have sold on one of those pops. Okay. And while, again, STAX AI does have a very high hit rate, there's still, it's not 100%. There are going to be positions where, sometimes you might get a little bit too greedy and a position is going to reverse on you. But depending on how much time it has, sometimes you will have more time for it to play out, and continue to use STAX for your analysis to see whether or not this is a position that has that potential to come back. All right. AMSC, they did have a solid earnings. It looks like this is possibly carving out some sort of bottom right here. I do believe that the position for AMSC was probably taken somewhere up here. So this position is definitely down after a poor earnings call. Here's a possible part of that theory is that maybe they knew their EPS, their earnings, was going to beat by a large amount, and unfortunately it moved in the wrong direction for them after that earnings, right? So remember, they have a certain amount of data, they have a certain amount of information that they're basing that position off of. There are times where this might go against them, so just keep that in mind. All right. I would look at it more as, you and I do not have the $1 million portfolios to be taking this risk all the way to zero. So again, this might be a position where you might want to consider finding a way to get yourself out, or on the next pop that you see, because right now we do have these 3 wicks on the lower end. We have a small gap here and a bigger gap above. I could see this making a pop pretty soon, especially because we have very low volume coming down into this. I do think that AMSC, at least this chart right now, says that we could probably see a move to the upside and maybe a retest down below before we move back up. But this being a semiconductor corporation, they have a decent moat around their company, meaning that their products are in demand at the end of the day. Very possibly, if you have till January, we could definitely see a potential for this to come back up. Now, obviously for this type of drawdown to come back is gonna take some news. It's gonna take a solid move for it. So, you know, play your probabilities. One of the things that I would say as well is that, you know, try not to get too married to these positions. I know it's very easily to be emotionally invested, and then all of a sudden, if you see it go against you or you get out too early, it can definitely put you on tilt, which is definitely not what, you know, not something that you want to happen with these type of things. Use the data to your advantage, but try to, you know, stay logical and make sure that you manage your risk along that way. Let's also real quick. Let's peek at this one too. AMSC. If they're still buying on, that's the only print we've ever seen on it. So very low amounts being spent on this. I would say, to be honest, AMSC right now looks like it's a good spot. It's a good spot to get in on. It could still go down a little bit further, but the volume is kind of drying up. Looks like people probably don't want to let go of those shares. The one thing I will point out that I don't necessarily love, though, is that their PE ratio is very, very high, 94. But that we've seen in this market right now, that PE ratio only means so much, because if they are able to up their revenue, or, you know, that drops fairly quickly once that does happen. Which, by the way, Palantir has a PE ratio of 446. So just an example of what can happen. Oh, and then Intel. Intel has a PE ratio now of 3,573. So just an example for you guys to see. Well, I appreciate the 12 of you that decided to stick around for this entire live stream. Do me a little favor, if you did make it this far, go ahead and hit that thumbs up button for me on YouTube. We had a all-time high last time where I believe 20 something people hit the like button for us, but help me out here. That way the YouTube algorithm knows that we're worthy and that people actually want to share and talk about what we're doing here. I don't really have anything else for you guys. Let's take a quick peek over at Cisco, see where it went. It's moving up. Right under 80. So it looks like those calls that we saw were right on point. I said, you know, definitely a good possibility to the upside. Hopefully some of you guys maybe got in on that position. Hope you guys enjoy the rest of your day. Keep in mind, if you are not in STAX just yet, we do have a code for you guys. BF35 for Black Friday. You can get 35% off your annual subscription, or even monthly at this point. Go ahead and give us a try. Check it out. That way you guys can analyze the flow yourself. You guys can join in on the conversation and the community. Have a great rest of your Wednesday. We'll be back at it in our Discord tomorrow for live. That way I don't have to flip back and forth between screens manually here. Those are being recorded, where we will post them after the fact. Usually they won't be up till about 6 or 7 p.m. the day of, because we have to do some processing for it, for the Discord. The 5% off difference is going to be minimal with the amount of money that you're going to make with STAX, Jenny. So don't even worry about that. All right. As of right now, we do not have plans for any better codes than what we have right now. But keep in mind, Jenny, you've gotten much more value than just what that 5% represents there. So I wouldn't worry too much about it. Right? You've been a part of the conversation. You've been in on all of this with us. 5%. You're getting much more than that in terms of your return off this. That $50 is gonna buy a box of diapers at this point. For the Discord, I gotta double check. We should have a code for the Discord as well. Right now, it's for STAX. You do get partial access to our Discord. just so you know, with the STAX subscription. If you have any questions, you can definitely just email us or send me a message and we can deal with it from there. But we are running our Black Friday promotion a little bit early for you guys. That way you guys can trade along with us for the the majority of this month instead of waiting just for that last week. I will post some stuff in TraderLink as well for you, so you guys can get those codes in there too. Keep an eye out for my channel. All right. Hope you guys enjoyed this today. We will chat with you very soon. Have a great rest of your Wednesday, and as always,